大家好，讀你聽嘅時間，今日繼續讀 Michael Lewis 嘅 Liar's Poker， 讀到11節啦，講到 Junk Bond 債券嘅出現呢，而令到成個市場呢又出現咗一啲變化啦，包括 Salomon Brothers 嘅衰落啦，同埋一啲其他大行只要有涉及呢一種 bond 嘅蓬勃啦咁樣。而包括作者在內啦，呢個 Salomon Brothers 入面嘅一啲 trader 啦，佢哋對於公司嘅前景咧，亦都充滿咗好多質疑啊！包括 John Goodman 啦，佢哋嘅 CEO 啦嘅領導無方啦，同埋佢嘅獨裁啦、自私啦，咁呢啲形容詞咧喺本書係揾唔到嘅，咁但係從佢嘅行為咧就可以睇得出啦嚇，咁所以即係可見作者對於 John Goodman 嘅態度。好，我哋繼續睇下呢個 Salomon Brothers 點樣喺呢個殘局入面自處咧嚇，會唔會繼續俾人全面收買啊、全面收購咧嚇？咁而作者嘅下場又係點咧？我哋睇下 Chapter 11 When Bad Things Happen to Rich People. One of my favorite sinners, Edwin Edwards, the former governor of my home state of Louisiana, was fond of saying that hell's hottest fires burn for hypocrites. But Lord, how I hope it isn't so. No more than 2 weeks after Ronald Perelman's takeover bid, I was instructed that junk bonds were the new priority of Salomon Brothers. Amazingly, we had a deal to sell. The Southland Corporation, owners of 7-Eleven food stores throughout the United States, had been bought in July 1987 by its own management with $4.9 billion borrowed dollars. Salomon Brothers and Goldman Sachs had extended a short-term loan for the purpose, known as a bridge loan. Like all bridge loans, our loan was supposed to be quickly replaced by junk bonds in the name of the Southland Corporation. The junk was to be sold to investors, and the money from that sale would remit to us. The only hitch was that investors, for whatever reason, shied away from the junk. We salesmen were blamed for not trying hard enough. Dash Riprock had shrewdly isolated himself by persuading his superiors long ago that his customers bought only U.S. government bonds. As a result of his foresight, he wasn't expected to peddle junk. I, on the other hand, was in a deal up to my eyeballs. I had the same problem as the man who gives $1 million to a charity only to find himself inundated with demands for more. My sale of Olympia and York bonds had taken place more than a year before, but it and other similar sales continued to haunt me. It was assumed not unfairly that anyone who could con his customers into buying $86 million worth of Olympia and York bonds should also be able to sell a large number of bonds in the Southland Corporation. I was paying for my past by being sentenced to repeat it. I had no ability whatsoever to evaluate Southland's bonds on their merits, but since ignorance hadn't stopped me before, it was not expected to stop me now. Salomon's junk bond specialists insisted that Southland was a good investment, but then they would. They had the most to gain if the deal succeeded, and the most to lose if it failed. If the bonds were dog meat, no one would have said it. Bonus time was soon upon us. The honesty about the quality of our merchandise was trading at a discount. My gut feeling was that Salomon Brothers knew nothing about junk bonds and that, as a result, any junk we underwrote deserved its name. Salomon Brothers was, I thought, making a trading mistake typical of a rank beginner, leaping into a crowded, frenzied marketplace and buying whatever is for sale at the top. I had no choice but to trust my instincts, as there was no one who knew anything about Southland, whom I could trust at Salomon Brothers, and my instincts said that these bonds were doomed. As my last New Year's resolution, I had stopped selling people things I didn't think they should buy. For Lent, I had given up my New Year's resolution. I still felt dishonest about my small role in the world's capital markets, even if the rule governing those markets was caveat emptor. And I wasn't the only one. Dash was an expert on the ethics of bond salesmanship. "You sneak," he'd shout whenever anyone jammed bonds. Then he'd go and jam a few himself. More to the point, each time I jammed bonds into an investor's portfolio, they came back to haunt me, usually in the form of tenaciously pissed-off customer calling each morning with some variant on Herman the German's bitter refrain. "Michael, have you any more great ideas up your sleeve? I did not sleep well at night or enjoy falling out of bed in the morning, imagining, as I did, investors across Europe sticking pins into miniatures of me. The question concerning the bonds of the Southland Corporation, then, was how to steer my customers around them. This was more easily said than done. Not selling bonds was a tricky affair, much trickier than selling bonds, more like playing squash with your boss, because you had to appear to want to win at the same time you intended to lose. Southland was especially tricky because it was Goodfriend's bid to show the Salomon Brothers was a force to be reckoned with in junk bonds. I received telephone calls from several New York managers, whose job it was to pester salesmen and who were galvanized by Goodfriend's interest in the project. They asked what luck I was having. I lied. I said that I was giving Southland my best shot when in fact I had not placed a single sales call. Still, they would not let me be. It seemed that I, like a golfer, needed to improve my lie. Either it sounded unconvincing or more likely, other salesmen were telling much better ones. One of the junk bond specialists insisted on actually watching me place a sales call to my biggest client, my Frenchman. Mercifully, he did not insist on listening in. He only wanted to be able to say that he saw me try. We sat at the corner of the trading desk, he beside me, while I did the dirty work. Oui, said my Frenchman. Hi, it's me, I said. But who else? There is a deal you should have a look at, I began, measuring each word. It's extremely popular with American investors. Then we shall let them buy it all, he said, having caught on. I'm sitting here with one of our high-yield bond specialists who thinks Southland bonds are cheap, I continued. But you don't, he said, and laughed. Right, I said, and then launched into a long-winded sales pitch that greatly pleased both the junk bondmen from Salomon and my customer, though for different reasons. No thanks, said my Frenchman at the end of it. The junk bond specialist praised me for a job well done. He didn't know how right he was, but he'd soon find out, for Southland was indeed doomed. In the middle of October 1987, Salomon Brothers, still retching from its brief encounter with Ronald Perelman, underwent the most concentrated trauma in its history. Over a period of 8 days, event followed event like too many hairy rides in an amusement park. I watched the firm take blow after blow, each more confusing and disorienting than the last. Hundreds of not particularly innocent victims were crushed in the avalanche of misery. Monday, October 12, 1987, Day 1. The 8 days that shook Salomon began, appropriately, with what appeared to be a misjudgment at the very top of the firm. An unnamed board member of Salomon Brothers, sometime during the weekend, told a New York Times reporter that the firm was planning to fire 1,000 people. The news was completely unexpected. We all knew Salomon Brothers had been conducting a review of its business, but we had been assured that absolutely under no circumstances would the review put anyone's job at risk. Either the bosses who peddled this line were lying or they were ignorant, and I don't know which I prefer to believe. This morning, the head of the London office called us together in our auditorium and said that no decisions have been made regarding personnel, implying that no one was to be fired. In that case, someone in New York made some pretty quick decisions, because later in the day, 2 entire departments on 41st, municipal bonds and money markets, consisting of around 500 people, were summarily dismissed. It was as much a shock to them as it was to me. The boss of the money market sales department on 41st, a nice, soft-spoken man, walked into the midst of his troops at 8:30 a.m. and said, "Well, boys, it looks as though we're history." Then his boss, the head of all sales on 41st and a card-carrying, big-swinging came rushing over beside him and shouted, "Stay where you are, damn it. Nobody's going anywhere. Nobody's losing his job." Then just as the whole money market department was settling back into their seats, an internal memo flashed across their Quotron machines that said, in effect, "You are fired. Anyone who still wishes to work at Salomon, let us know, and maybe we'll be in touch, but don't hold your breath." Neither municipal bonds nor money markets were profitable. Does that mean we should have dropped them completely? The firm could, at little expense, have kept a small staff in both markets. That would have appeased the customers who had come to depend on us in these areas and were now furious with us. And it would have enabled us to profit in the event that either of the two markets recovered. Why dump whole businesses? Why not, at the very least, sift through the people and keep the best for other jobs? A star municipal bond salesman could easily become a star government bond salesman. Salomon Brothers was the nation's leading underwriter of municipal bonds and among the leaders of the money markets. The people employed by these departments were by no means losers. The men who made the decision were practicing their favorite anatomical trick of thinking with their In other words, they weren't thinking at all but trading. Bill Simon used to shout at his young traders, if you guys weren't trading bonds, you'd be driving a truck. Don't try to get intellectual in the marketplace. Just trade. When a trader is long and wrong, he cuts and runs. He drops his position, cuts his losses, and moves on. He only hopes he hasn't sold at the bottom, which is what people do who buy at the top. What jarred the intellect even more than the treatment of fully formed businesses as trader fodder was the excuse Goodfriend gave for the bailout. He told the firm and the press that he had intended to prune intelligently but had been forced by events outside his control to take quick action. Once the news hit the papers, he said he had to get out immediately. The New York Times, in other words, affected policy at Salomon Brothers. Either that, or the chairman was using the New York Times as an excuse for what he had done. That made the biggest mystery of the day even more mysterious. Who lead? From his first day as a trainee to his last day as a big swinging a Salomon Brothers employee believes it is cardinal sin to speak to the press. In general, our people kept clear of reporters. As a result, nothing of what went on in our firm ever made it into the newspapers. It was inconceivable to me that the leak was a mere indiscretion. It must therefore have been a conscious act of sedition. But by whom? All we knew was that it had come from a member of the board. The board included John Goodfriend, Tom Strauss, Bill Foote, Jim Massey, Dale Horowitz, Miles Slater, John Merriweather, and about a dozen other lesser players. They were said to be searching frantically for Deep Throat. At first, I thought the obvious place to start was by asking who among them had the most to lose from the cuts. Easy. Horowitz, the head of the municipal bond department. He lost everything. After the cuts, he became a minister without portfolio. But then again, if the motive was to save the municipal bond department, it clearly backfired. As Griffin said, it resulted in even more people being cut than was planned. So perhaps the source was not engaged in a last-minute rescue mission. What if one assumed that the source got exactly what he wanted? Who gained from the leak? Unfortunately, unless the motive was revenge on Horowitz, no one. And revenge was too weak a motive to justify the risks of being caught leaking. Whoever leaked put his job on the line. The entire board of directors would have been petrified at the thought of being discovered and humiliated by John Goodfriend. Fear is perhaps the key to the riddle. Who had the least to fear from John Goodfriend? Elementary. John Goodfriend. I know, it begins to sound crazy. And when the Salomon Brothers colleague put the theory to me that Goodfriend had contrived the leak in order to expedite the firings, I laughed. But I wasn't able to shake the notion, for I saw how eagerly Goodfriend clung to the leak as an excuse for what he had done. The leak became his life raft. Once we had read about them in newspaper, the cuts assumed an odd air of inevitability. There, you see, he could say, it was the New York Times and goddamn the who told them. Still, the hypothesis was weak, for surely Goodfriend would have realized that such a leak discredited, ultimately, himself. Whoever the source, his anonymity had the effect of spreading the guilt of one man across the entire board of directors. They all were thought to be guilty by the rest of us. Salomon Brothers had a deep throat. A few managing directors who were not on the board refused to discuss anything requiring discretion in the presence of board members. The divisiveness at the top of the firm was more apparent to us peons than ever before. One crusading managing director told each board member, I'm sorry, but until we find out who leaked, we feel we can't trust any of you. Such a true tale of valor spread quickly across the trading floor. I felt a welling frustration. There was nothing I could do but watch. Did corporate heads ever take responsibility for their actions or the actions of their subordinates? Was there no honor left? A similar leak in the British government would precipitate a flurry of resignations, but our chiefs never seemed to suffer for their mistakes. They applied a kind of marginal analysis to each new screw-up and said that what had been done was behind us and that no good would come from further shock to the firm. My feeling was that our woes were caused, at least in part, by the feeling among the men at the top of the firm that they had no personal exposure if their empire collapsed. What was perhaps most disturbing of all, however, was that the only promise made to all new Salomon Brothers employees had been broken. Most people had been assigned to municipal bonds and money markets without having had much say in the matter. I'm glad I hadn't believed Jim Massey when he told us, as he told every training class, to relax and let the firm decide which department you joined. Performance will always be rewarded, he had said. Many had trusted him. If the firm broke the covenant when it fired Louis Ranieri, it scattered the shards with this decision. At the end of the grisly day, there were as many nervous people as there had been in the beginning, especially in London. Deep Throat had told the New York Times that Salomon planned to fire 1,000 people. 500 were gone. It clearly wasn't over yet. But who, pray tell, was next? Wednesday, October 14, 1987, Day 3. President Tom Strauss came to tell us that we had been earmarked as the branch office most in need of cuts. The diagnosis had been made a month ago, when a London managing director had botched a presentation in our defense to a business review committee in New York. Instead of justifying our levels of staffing or mapping a plan, he had spent his time explaining why our failure wasn't his fault. Goodfriend had been justifiably upset by his posturing, of which we had now all learned. The review committee members had assumed the worst about us. You couldn't fault them. We weren't doing very well. The waiting part was the worst. People on the London trading floor seemed to have no clue whether they had been targeted by management or not, but all knew that a lot of us, as many as a third of the bond people, would be liquidated. Each person considered himself essential to the future of Salomon Brothers. I, too, considered myself essential to the future of Salomon Brothers, but that in itself was no assurance when everybody else felt the same way. I began to wonder, what would I do if they fire me? Then what would I do if they don't fire me? All of a sudden, Salomon Brothers seemed more livable than before. Each unit manager, a jungle guide, submitted a list of his employees in order of their usefulness to him. The London managing directors convened beneath an imitation canaletto in one of the Gone with the Wind dining rooms and chopped from the bottom of each list. I eyed my jungle guide with suspicion. Friday, October 16, 1987, Day 5. The first hurricane in 100 years hit London squarely early in the morning. Huge trees snapped, power lines fell, and windows shattered from about 2 a.m. until dawn. Commuting into work was possibly eerie. The streets were empty, and shops normally open were boarded shut. A crowd huddled beneath the awning of Victoria Station, going nowhere. The trains did not run. It looked like an ABC miniseries on nuclear winter, or perhaps a scene from The Tempest. Caliban could not have chosen a better day to roar. It was a bad day for 170 people in our office. People struggled over fallen trees, treacherous roads, and water hazard to make their way into work, only to find, at the end of the steeplechase, no job. Others suffered slow torture, waiting literally in the dark for hours before they learned of their unemployment. The storm had knocked out the electricity, and we had no lights on the trading floor. Most of us hovered near our desks. Phone calls came from managing directors, inviting people one by one to their doom. What was so awful was not the loss of income, but the embarrassment of having failed. We had taken for granted the narrow sort of success we had achieved, thought it to be not just important, but essential, like legs. Anyone fired seemed defective, and we all blushed at his deficiency. A few people took their first cold look at the situation and telephoned headhunters from their desks while they waited. A few others were even craftier. Word spread that all the cuts were in the bond departments. This was true. The head of equity, Stanley Shopcorn, had taken a brave stand against Goodfriend. He said he'd rather resign than fire a single person. Seeing that the equity department was not firing anyone, the crafty few began to interview for equity jobs. Theirs was a race against the clock. They needed to be fired before they were fired. Once fired, they lost their right to remain on the trading floor. The security guard would take away the security passes as they emerged from the firing squad's chamber and banish them from the building. Management took the path of least resistance and fired the most recent additions to the office, until the day came to resemble the massacre of the innocents. This defeated the purpose of the cuts. Fire 10 geeks and you reduce costs by about as much as if you had fired one elderly managing director. But young people had the advantage of being easily to sack because they had yet to build a web of connections within the firm. They had no voice. I was saved partly because I was considered, unbelievably, an old hand. partly because I had just enough friends in high places, and partly because I was one of the 2 or 3 biggest producers in the office. A disproportionately large number of women in London were fired. They later compared notes and learned they had been given, almost verbatim, the same speech by the head of sales. To each he hemmed and hawed and said, "You're a smart girl, and this is no reflection on your abilities." Most of them didn't like being called gal. "Who are you calling gal, Peckerwood?" A few told the security guard to off when he asked for their passes. As the firings progressed, the victims began to return to the trading floor. There was a good deal of weeping and hugging all round, which I wouldn't mention except it was such an unusual sight. No one ever cried on the trading floor. No one ever showed weakness or vulnerability or need for human kindness. Early on, Alexander taught me the importance of a strong exterior. "I learned a while ago that there was no point to showing weakness," he said. "When you arrive at 6:30 a.m., having had no sleep the night before, and having lost your best friend in a car accident, and some big swinging walks over to your desk, slaps you on the back and says, 'How the hell are you?' You don't say, 'I'm really tired and really upset.' You say, 'I'm great. How the hell are you?'" There was a single upbeat note struck this day. A friend of mine, one of the few remaining older Europeans, stood at his desk from 8 a.m. until noon. He hopped about like a small child on Christmas Eve. What he wanted from Santa was the sack. He had already accepted a better job at another firm. He had intended to quit Salmon at the beginning of the week, but seeing he might be fired instead, he waited and held his tongue, hoping to receive a golden handshake. The severance payments were indeed generous and based on tenure. My friend had been with Salmon for 7 years and, if fired, stood to receive several $100,000. I rooted for him. I was sure he deserved the axe, but I was afraid that management might feel reluctant to jilt an employee of such long standing. Thankfully, it swallowed its devotion, gathered its courage, and called him into the dining room. Then the call came through. There was a rush on the floor to congratulate him and lots of smiles and laughter. He was going to a better afterlife. A trader posted a notice in the men's room near the end of the day. The men's room doubled as a used car auction room. Most days there was a BMW or a Mercedes on offer. This trader, however, was selling a Volvo, a bad omen. Saturday, October 17, 1987, day 6. I flew to New York for 2 reasons. Months before I had agreed to speak to the training program on salesmanship. My speech was scheduled for Tuesday, October 20th. This now appeared to be a grim assignment, for the 250 trainees had little hope of keeping their jobs. The other reason for my tip was to lobby with New York managing directors for a big bonus. This oleaginous practice was standard in a London office. During the last couple of months of each year, most London salesmen and traders visited New York to be seen and to argue, very subtly, that they deserved a great sum of money at the end of the year. The argument took the form of wishing bosses a happy holiday season in a loud voice and looking poor when they asked how you were doing. My jungle guide virtually insisted that I make the journey. That was most kind of him. He was watching out for my interests. That made 2 of us. Monday, October 19th, 1987, day 7. Because my speech wasn't until Tuesday, I had a day free to roam the 41st floor in New York. Normally I hated doing this. On 41st, even after I had established myself, I always felt I was having an out-of-body experience. The place to me always felt as dumb as a football huddle. But this time it was different. The floor had been gilded. It was like a visit to a museum or to a ghost town, rather than a barroom brawl. There was a vast, empty space around George Griffin's desk, which was where the money market people once sat. Where there once was noise and bustle, there was now only eerie silence, much like the streets of London last Friday. The money market people had apparently left in a hurry. Inspirational signs still hung over their empty desks. Eat stress for breakfast. Read 1. Pictures of boyfriends and private messages remained taped to their trading positions. Scribbled over an empty seat of a redundant saleswoman was a view that men who call women sweetheart, baby, or honey should have their tiny little peckers cut off. These were no ordinary victims, though victims they were. Here in New York, as in London, a conspicuously large number of women were canned. It's not as if the women had been less astute in choosing their jobs. They just had less say in their destiny. For whatever reason, women coming out of the training program were usually assigned to loss leaders. For several years, one of the sinkholes had been the money market department. Perhaps 10% of the trading floor professionals were women, but women were nearly half of money market sales and, therefore, a large number of the Sachs. My New York rabbi and his congregation were moving into the seats vacated by the money market department. Whenever I returned to New York, I sat beside my rabbi, normally with a sigh of relief, but this time I shuddered at the thought. I wondered if the move wasn't a trifle premature, like moving into a house while the previous owner is carried out in a coffin. It made me uneasy knowing what happened to those who once sat where I did. However, there was plenty to distract me. My rabbi was moving up in the world. The seat beside him happened also to be right next to John Goodfriend, so I plunked myself right beside our chairman and rode shotgun on the Deathmobile. The public announcement of the sale of Salmon Brothers to Phillips Brothers in 1981 stood on his desk, beside a fuming cigar. Symbol, metaphor, ashes to ashes, and so on. From this lofty promontory, I watched the crash of 1987. The stock market fell, of course. It fell as it had never fallen before in history, paused, then fell some more. I rushed back and forth between my seat on 41st and the equity department on 40th. The stock market crash had huge and arbitrary wealth redistributionary effects, and the two floors had entirely different reactions to it. A lucky man in the equity department had gone short S&P stock index futures on Friday, and by the time he had a chance to close out his bet on Monday, the futures were 63 points lower, and he had cleared $27 million. His joy was unique. The rest of the equity department was tossed between despair and confusion. Early in the day, there was trading. I heard the Brooklyn screams of a dozen men at once. Yo, Joey. Hey, Alfie. What are you doing? Mel. George Boducci. You can buy 25,000 phones in half. Later, however, trading dried up, a harbinger of the coming torpor in the stock market. Investors froze like deer in headlights. Time and time again, someone stood up and shouted, for no particular reason, Jesus Christ! They were helpless as they watched their beloved market die. Of course, my customers in Europe was losing their shirts, but there was nothing I could do for them. I thanked Mammon for the umpteenth time for making me a middleman. To a man, my customers chose to hunker down and wait out the storm. Meanwhile, the bond market was shooting through the roof, and more than a few bond traders failed to conceal their glee. Once the stock market had fallen a few hundred points, investors began to consider the macroeconomic effects of an honest-to-God crash. The prevailing reasoning in the bond market went like this. Stock prices were lower, therefore, people were less wealthy, therefore, people would consume less, therefore, the economy would slow down, therefore, inflation would fall, therefore, interest rates would fall, therefore, bond prices should rise. So they did. One bond trader who had bet against the bond market stood up and screamed in the direction of the Statue of Liberty. I badmouthed the U.S. government. I shot their debt, and they me. That's what I do for a living. Why bother? But most everyone else was long and getting longer. The bond traders were making a fortune. This one day made up for much of the year. As the stock market crashed, the 41st floor of Salmon Brothers cheered. And many of us asked our first questions about the wisdom of the firings of the previous week. The world of money was in upheaval. Funds were rushing out of the stock market and into safe havens. The conventional safe haven for money is gold, but this was not a conventional moment. The price of gold was falling fast. Two creative theories made their happy way around the trading floor, both explaining the fall in gold. The first was that investors were being forced to sell their gold to meet margin calls in the stock market. The second was that in the depression that followed the crash, investors would have no need to fear inflation. And since for many gold was protection against inflation, it was less in demand. Whatever the case, money was pouring not into gold but into the money markets, i.e. short-term deposits. Had we had a money market department, we could have made a killing presiding over this movement, but we did not and could not. The decline in business after the crash occurred mainly in the equity markets, and which was the one and only department not to cut a single employee? Equities. So the area most stylily overstaffed was the one that had made no cuts. Many of us also asked our first questions about the wisdom of entering the junk bond market. With the stock market crash the market in junk bonds, inextricably linked to the asset values of corporations, temporarily ceased to function altogether. The fickle stock market was saying that one day corporate America was worth $1.2 trillion, and the next only $800 billion. Junk bond investors dumped their holdings when they saw the wild behavior of the collateral. Our Southland junk bond deal collapsed on October 19th. When the stock market crashed, the value of 7-Eleven stores and, therefore, junk bonds backed by 7-Eleven stores crashed too. From my seat on the trading floor, I called my customers in Europe. When I reached my Frenchman, he thanked me for never having sold him junk. Most of what happened to a big firm like ours during the crash was largely invisible to the outside world, but one important event was not. Along with other Wall Street firms, Salomon Brothers had agreed to purchase from the British government and distribute worldwide 31.5% of the shares in British Petroleum. We owned a chunk of the company at the time of the crash. We had lost more than $100 million on our stake. Who would have imagined that our largest single equity underwriting would coincide with the largest drop in history in the stock market? Then who would have imagined that our first big junk bond deal would coincide with the crash of the junk bond market? It was striking how little control we had of events, particularly in view of how assiduously we cultivated the appearance of being in charge by smoking big cigars and saying all the time. Throughout the crash, John Goodfriend seemed in his element. He was, for the first time in ages, making trading decisions. It was a joy to see a man rediscover his youth. He spent little time at his desk. He sprinted back and forth across the floor and held brief strategy sessions with his head traders. At one point, his attention drifted to his net worth, and he bought 300,000 shares of Salomon Brothers for his personal account. When I overheard him doing this, my first reaction was that he was trading on inside information. My second reaction was that as long as it was legal, I should do it too. Pretty greedy, huh? But also pretty smart. Salomon's stock was crashing faster than the market as a whole. All brokerage stocks were getting hit because investors who had no way to gauge the internal damage we had suffered assumed the worst. We were losing small fortunes on both British Petroleum and Southland, our two visible risks. Goodfriend knew, however, that our losses were not what they seemed. We had lucked into $27 million in the equity department, and the bond departments were rolling in dough. A quick calculation showed that Salomon's share price implied a value for the money less than its liquidation value. After checking with our legal department to make sure I wasn't following Boski's footsteps, I followed Goodfriend's and bought a bunch of Salomon shares with the bonus I was busy lobbying for. Many others on our trading floor were doing the same. Goodfriend would later say that it bespoke of a faith in the firm when employees bought Salomon shares and that he personally found it encouraging. Perhaps, but I for one wasn't making a statement of faith when I made my purchase. My investment was raw self-interest, coupled with a certain abstract pleasure in having found a smart bet. Within a few months, Salomon shares had bounced back from a low of $16 to a $26. Tuesday, October 20th, 1987. Day 8. The post-mortem began. The credit committees convened an emergency session in New York. Its stated purpose was to assess Salomon's credit exposure to institutions that appeared bankrupted by the events of yesterday, such as E.F. Hutton and the entire community of equity arbitrageurs. Instead, for the first half hour, the committee members squabbled. All but one man on the committee were American. The exception was a Brit, who flew in from London especially for the meeting. He became a punching bag for the Americans, who pinned blame for the crash squarely on the British government. Why were the Limeys insisting on continuing their sale of the state-owned British Petroleum? The traders, who thought pretty much exclusively in terms of short-term market forces, felt that the multi-billion-dollar sale of BP shares imposed on the market at weight it could not bear. The whole stock-buying world was panicking at the thought of a new supply of stock. Never mind that the United States was running $1 trillion budget deficit, or that the dollar was unstable, or that busts, like their better halves, booms usually have a logic all their own. A few of the Americans were jumping all over the Brit for the behavior of his countrymen. One said, sneeringly, "You guys did just this sort of thing after the war too, you know." You would think that the battle lines on this day would be drawn along the borders of financial interests instead of the borders of nations. Everyone around the table at the credit meeting was on the same team, but people didn't behave like it. The xenophobia was by no means limited to Salomon Brothers. An American partner of Goldman Sachs, a firm also stuck with a $100 million loss on its shares in BP, called a senior Brit at Salomon and blamed him for the problem. But why? It turned out the Goldman partner wasn't thinking of his Salomon counterpart as a representative of Salomon, but as a Brit. Your people damn well better pull it, he shouted. If it wasn't for us, you'd all be speaking German. The shrewder player in our shop weren't looking to affix blame, but to find a way out. How could we avoid losing $100 million on our stake in British Petroleum? Or, to put a finer point on it, how could we persuade the British government to take back its shares at the price it had sold them to us? One of the managing directors from London, who happened to be in New York, actually took me aside to practice an argument he planned to put to the Bank of England. He had calculated the sum of the losses of the banks underwriting BP to be $700 million. He said that the world financial system might not withstand the strain of capital from the system. Another panic could ensue, right? Amazing. He was so desperate to avoid the loss that I think he actually believed in his lie. Sure, why not? I said. It's worth a try. Basically, it was an old ploy. My boss wanted to threaten the British government with another stock market crash if it didn't take back its oil company. Later that day, the last day I clearly recall of my time at Salomon Brothers, I spent an uneasy hour in a training class talking to 250 blank stares. The trainees had reached that state of high despair that resembles accounts I have read of the Black Death of the 14th century. They had lost all hope and decided that since they were going to be fired anyway, they might as well do whatever they please. So they all became back row people. I dodged the paper wet as I entered the room and an impressive amount of apathy as I spoke. It was an audience only Rodney Dangerfield could have appreciated. They didn't care what I had to say on my assigned topic, selling to Europeans, but they were vaguely curious if there were any job opportunities in the London office and if I knew when they would be fired. They were sure that they were alone in not knowing what was happening to our company. How blissfully naive. They were, in particular, angry and frustrated that Jim Massey hadn't made at least a token appearance before them. Did they still work for the brothers, or what? They were left to wonder for only 2 hours more. The speaker who followed me was interrupted by the entrance of Jim Massey, flanked by two men who looked like bodyguards, but were only traders. He bore the fate of the 250 trainees. Before making it known, however, he explained in merciless detail how difficult the firings had been on senior management, how ultimately they would make the firm stronger, and how these sorts of decisions were always painful to make. And then, we have made our decision regarding the training program, and we have decided to maintain our commitment. You can stay. A handful of people scrambled back into the front row as soon as Massey had left, but the news wasn't as cheery as it sounded. There were no vacancies on the trading floor. At the end of the program, most of the trainees became clerks in the back office. December 17, 1987, bonus day. A strange and glorious day. The firm, for the first time in its history, broke the compensation bands. It was lucky for me. My bonus was meant to fall within the band, which would have limited to about $140,000. Instead, it paid me $225,000, which is more than it has ever paid any employee 2 years out of the training program, or so I have been told. I am now the highest paid member of my training class, but that means less than it did. More than half my class has either quit or been fired. It is now clear that given time, and only time, the firm would make me a rich man. Doing the same level of business, I would be paid $350 or so next year, $450 the year after that, and $525 the year after that, and so on, with lesser increases but higher totals each year until I did or did not become a managing director. But it was sad and a bit ridiculous to break the bands and pay selected employees more than ever before in the worst year in the recent history of the firm. The firm cleared $142 million, an abysmal return on $3.5 billion in capital. The numbers looked even worse when you consider that the firm for most of the year had been twice the size of 3 years before. Why was it paying me now? I had an idea. When the head of sales presented me with my bonus, he tried to ensure that I appreciated what a monumental gift was being made to me. The clue to the large sum was in his eyes, panic. Salmon Brothers, in a sense, made a trade by putting a price on the services of an employee, and now, having lost a great number of people, it was less composed than usual as it traded. One thing is for sure, it did not pay me a premium because it thought it was the right and proper thing to do. A few good men at the top of the brothers did what was right and proper, including, I am proud to say, my rabbis. But most did only what was necessary. It paid me more because it thought that would compel me to stay, seal my loyalty. What loyalty I had was already sealed. I felt loyal to a handful of individuals, Dash, Alexander, my jungle guide, my rabbis. But how can you speak of loyalty to the firm when the firm is an amalgam of small and large deceptions and riven with strife and discontent? You can't. And why even try? But now it was abundantly clear that money game rewarded disloyalty. The people who hopped from firm to firm and in process secured large pay guarantees did much better financially than people who stayed in one place. Salmon's senior management had never before tried to purchase the loyalty of its people. The managers weren't much good at the game. They could have seen, had they looked at me with the eyes of a liar's poker champion, that I would never leave or stay because of money. I'd never have gone to another firm for a higher paycheck. I'd leave Salmon Brothers for other reasons, however, and I did. Epilogue. I left Salmon Brothers in the beginning of 1988, but not for any of the obvious reasons. I didn't think the firm was doomed. I didn't think that Wall Street would collapse. I wasn't even suffering from growing disillusionment, although there were many perfectly plausible reasons to jump ship. I left, I think, more because I didn't need to stay any longer. My father's generation grew up with certain beliefs. One of those beliefs is that the amount of money one earns is a rough guide to one's contribution to the welfare and prosperity of our society. I grew up unusually close to my father. Each evening, I would plop into a chair near him, sweaty from a game of baseball in the front yard, and listen to him explain why such and such was true and such was not. One thing that was almost always true was that people who made a lot of money were neat. Horatio Alger had all that. It took watching his son being paid $225,000 at the age of 27 after 2 years on the job to shake his faith in money. He has only recently recovered from the shock. I haven't when you sit, as I did, at the center of what has been possibly the most absurd money game ever and benefit out of all proportion to your value to society. When hundreds of equally undeserving people around you are all raking it faster than they can count it, what happens to the money belief? Well, that depends. For some, good fortune simply reinforces the belief. They take the funny money seriously as evidence that they are worthy citizens of the Republic. It becomes their guiding assumption, for it couldn't possibly be clearly thought out that a talent for making money come out of a telephone is a reflection of merit on a grander scale. It is tempting to believe that people who think this way eventually suffer their comeuppance. They don't. They just get richer. I'm sure most of them die fat and happy. For me, however, the belief in the meaning of making dollars crumbled. The proposition that the more money you earn, the better the life you are leading was refuted by too much hard evidence to the contrary. And without that belief, I lost the need to make large sums of money. The funny thing is that I was largely unaware how heavily influenced I was by the money belief until it had vanished. It is a small piece of education, but still the most useful thing I picked up at the Salmon Brothers. Almost everything else I learned I left behind. I became fairly handy with a few $100 million, but I'm still lost when I have to decide what to do with a few thousand. I learned humility briefly in the training program, but forgot it as soon as I was given a chance. And I learned that people can be corrupted by organizations. But since I remain willing to join organizations and even to be corrupted by them, I'm not sure what practical benefit will come from this lesson. All in all, it seems I didn't learn much of practical value. Perhaps the best was yet to come and I left too soon. But having lost my need to stay at Salmon Brothers, I discovered a need to leave. My job became nothing more than showing up every morning to do what I had already done, the reward for which was simply more of the same. I disliked the lack of adventure. You might say that I left the trading floor of Salmon Brothers in search of risk, which was as stupid a financial decision as I hope I'll ever make. In the markets, you don't take risks without being paid hard cash at the same time. Even in the job market, it's a handy rule, and I have broken it. I am now both poorer and more exposed than I would have been had I remained on the trading floor. So, on the face of it, my decision to leave was an almost suicidal trade, the sort of thing a customer might do if he fell into the hands of a geek salesman in Salomon. I believe I walked away from the clearest shot I'll ever have at being a millionaire. Sure, Salomon Brothers had fallen on hard times, but there was still plenty of gravy on a tray for a good middleman. And if Salomon turns itself around, the money will flow even more freely. As it happens, I still own shares in Salomon Brothers because I believe it will eventually recover. The strength of the firm lies in the raw instincts of people like John Merriweather, the Liar's poker champion of the world. People with those instincts, including Merriweather and his boys, are still trading bonds for Salomon. Anyway, business at Salomon simply couldn't get much worse. The captains have done their level best to sink the ship, and the ship insists on floating. In leaving, I was sure I was making the beginner's mistake of selling at the bottom, which I could only partially offset by buying a few shares in the company as I walked out the door. If I made a bad trade, it's because I wasn't making a trade. I was given pause. However, after I had decided to vamoose, I think that maybe what I was doing wasn't so foolish after all. Alexander insisted at our farewell dinner that I was making a great move. The best decisions he has made in his life, he said, were completely unexpected, the ones that cut against convention. Then he went even further. He said that every decision he has forced himself to make because it was unexpected has been a good one. It was refreshing to hear a case for unpredictability in this age of careful career planning. It would be nice if it were true. 好，所有11節啦，加埋個 epilogue 咧都讀完啦。故事嘅收尾咧就係作者離開 Salomon Brothers。喺1988年呢一刻，佢離開呢一刻都未被收購或者未倒閉，但係個結果咧到最後都係被收購咗嘅。作者咧喺呢個時候走咧都係屬於遲，咁佢亦都講佢離開呢個金融市場去出書咧，都係幾乎係一個自殺式嘅投資啦嚇。咁但係佢都係認為佢需要咁做，佢會提到係有道德感召嘅成分啦，因為佢爸爸影響啦。不過我個人覺得都難講啦嚇，畢竟佢自己曾經都係一個 trader。講嘢都唔可以盡信，而佢本書嘅最後亦都係即係引用咗佢一啲前輩講嘅説話啦，而佢自己都認為係唔可信。好，同大家分享幾個字啦。Inundate 一個動詞嚟嘅 ，inundate overwhelm someone with things or people to be dealt with， 令到人哋應接不暇嘅，令到人哋好忙應接唔嚟嘅 ，inundate 一個動詞嚟嘅。Convene 呢個字好常用 convene C-O-N-V-E-N-E 一個動詞嚟嘅 come or bring together for a meeting or activity assemble 召集啦開會啦集合啦 Verbatim 拉丁文一個副詞嚟嘅 adverb 嚟嘅 being in or following the exact words 一字不差咁樣 Verbatim 一字不差咁樣咁仲有好多字嘅，不過我每次都係分享3個字嘅啫。有興趣想學更多字咧，可以留意下我其他嘅短片啦。咁Liar's Poker 今日就分享到呢度啦，希望大家鍾意呢個系列。嚟緊我會繼續讀你聽嘅，大家留意啦，拜拜。